Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and here we are. What's happening, people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. Happy New Year, everyone. We are back finally after the holidays, and we are more determined than ever to help every single one of you understand how financial markets work. How are you guys doing? Did you miss me? I sure did. Please feel free to interact with us during the broadcast, guys. Feel free to ask questions if you have questions, and we will do our best to help. How was the winter holiday for you guys? Let me know in the comments box down below. Now, before we get started with the first live session of 2021, I have a couple of announcements to make, very, very important announcements. So please pay close attention. Number one, and this is the biggest gift for everyone, InstructFX is offering free mentoring to anyone that is looking to get started in the financial markets. Whether you're looking to start in the financial markets, whether you're a beginner trader, an experienced trader, or crypto enthusiast, feel free to contact us for a free consultation on instructfx.com or by email at info@instructfx.com, and our experienced team will contact you ASAP to help you get started. Number two, we're bringing gifts, guys. We're bringing more and more gifts for everyone. Number two, guys, I have 10 available slots in my agenda for this January. I want to personally help 10 lucky people that are looking to start trading. Drop me an email at thechartwhisper@gmail.com, and I will personally make sure that you will be of my group of traders. There are the details, guys. See, we have some comments again. Thank you for your comments. Right, Mahmoud. Happy New Year, brother. I hope you're doing all right. So, back to the good news, guys. 10 available slots this January. I'm going to take 10 lucky people that are willing to start learning in the financial markets completely free, and I will help them. I will mentor them for at least 2 weeks. Number 3 on the board. There's more to that, guys. There's more to that. We invite all retail traders that had a good or a bad experience in the Forex market to an open chat. Feel free to contact us anytime if you want to speak publicly about your trading experience, good or bad, and we will make sure your voice will be heard through our daily podcast. How about that? Is that a surprise or what? So, InstructFX is offering free mentoring, guys. I have 10 available slots for 10 people to join me. And we invite all retail traders to contact us if they have something to say about financial markets, about trading, about their trading experience, and about a trader's way of living. Now, in a few minutes, we're going to have Neil Wilson, Chief Market Analyst at Markets.com, joining us for the first round of Market Talks this year, guys. It's going to be amazing. It's going to be extraordinary. It's going to be unseen, unheard of. So stay tuned. We're going to come back soon with Neil Wilson. How is this for the start of the year, guys? What do you think about the presents that InstructFX is bringing you? Let me know in the comments box below. And if you're struggling with anything, if you have any more questions, I'll do my best to help. Now, let's get down to business, guys, and start the year. We're about 20 minutes ahead of the US trading session. We're going to see the charts for the first time this year together, guys. We're going to see what's going on. I already know what's going on, obviously, but I'm gonna share this with you in a few minutes. Let's get down to business and see what is happening in the markets today, 7th of January, 2021. US markets open. Coming up. All right, guys, and we're back. Let's see what's happening in the markets today. We have quite a few headlines, so get ready, get your pens ready, and let's get started. The U.S. Congress confirms Joe Biden as the U.S.-elect president. Donald Trump gets his Instagram and Twitter accounts blocked for the first time in the history, guys, after a harsh comment and promises a smooth transition a day after his supporters trashed the Capitol, engaging with the security forces. Crude oil consolidates above $50 once again. Gold price drops $20 in the last trading session, guys. Bitcoin is skyrocketing, trading above $38,000 today. And tomorrow, we have the first non-farm payroll of 2021. What a rally for Bitcoin, guys. What a rally. Right. So again, we're about 20 minutes away from the U.S. markets open. Let's have a look at top 5 things to know in the markets today. And we will welcome Neil Wilson for an amazing round of market talks. Let's have a quick look and see what's number one on the board today, guys. Biden confirmed Trump promises to go quietly. This is a good news, I'd say. This is a very good news. But considering what happened yesterday, guys, I don't see any other way. So the U.S. Congress confirmed the election of Joe Biden as duly elected president, paving the way for his inauguration on January 20th. Donald Trump said via spokesman that he would guarantee an orderly transition of power. Well done. Finally, some grown-ups. Now, the developments came after Trump supporters, many of them armed, stormed the Capitol yesterday in an unprecedented episode that left 4 people dead. Police reported in excess of 52 arrests. Biden called the incident an insurrection, and in a video message taken down by Twitter, Donald Trump repeated his support for the rioters, telling them, "We love you very much." Now, I don't want to comment on this one, guys. It's up to you to decide. It's all over the news. We all know what's happening. Right, let's see what's going to happen. But what I can say is that people should behave, guys. It's 2021. It's the 21st century. We should act like grown-ups. We should act like people from this century and not like people from the last century. But anyway, let's move on. Republican congressmen and senators continued the challenge to challenge the electoral results submitted by the states even after the riot, repeating allegations that have been dismissed and as unsubstantiated in over 60 legal cases by U.S. courts. A YouGov poll indicated that 45% of Republican voters supported the rioters' action, which, again, is not good, it's not correct, it's not nice. We are in the 21st century, so we should act like it. Right, number 2 on the board, guys, the U.S. dollar. Treasurers trim losses after Senate-driven sell-off. The dollar and U.S. Treasury bonds trimmed their losses after the Democratic Party's apparent victory in both of the Georgia Senate runoffs handed control of the upper chamber back to the party after 6 years, guys. 6 long years. Both had sold off on Wednesday in anticipation that Biden will be able to push though a more progressive agenda once inaugurated, given the Vice President Kamala Harris, which have the casting vote in a Senate split 50-50. By 6:30 a.m. Eastern Time, US dollar, the dollar index, guys, which tracks the greenback against a basket of currencies, was up 0.4%, trading at 89,877, while the 10-year-old bond yield was at 104%, down from the high of 107. Yeah, prices and yields move inversely, just so you know. Right, let's move on to number 3 on the board, guys. Stocks seem set to a higher opening on stimulus prospects, and also on the back of a weak US dollar, guys. This is the truth. We can't hide it. On the back of a weak US dollar, because the situation in the States so far, is on the edge of becoming catastrophic. Now, U.S. stock markets are poised to open higher again as the prospect of further stimulus from both the government and the Federal Reserve banishes any concerns about the stability of U.S. democracy and the rule of law. The market's attention will be on the initial jobless claims, which, by the way, came out positive, guys, came out better than expected. I'm going to show you the economic calendar in a minute. They were expecting 800,000 jobs on the dot, and we saw a result of 787,000. Yeah, slightly below what consensus had expected. Let's see, guys. Usually, the this announcement is a pre-announcement for the non-farm payroll data that will be announced tomorrow at 3:30 GMT plus 2, or 1:30 GMT. Very interesting what's going to happen. Is the US dollar going to turn around tomorrow, ending the downtrend and finally heading upwards on good and positive data? Let's see. I will be surprised if that's the case, but Only time will sell. Now, let's move on to number 5 on the board. Guys, Alibaba and Tencent head toward the US blacklist. All right, bear with me for a second. I have to do something, guys, because those pop-ups are just annoying. Bear with me for just a second, okay? And I'm going to cover the pop-ups with Donald Trump. Bear with me for a second. Where are we? There we are. Right. There we are. Okay, no more pop-ups. See, the pop-up sniper is back. So Alibaba and Tencent head towards U.S. blacklist, guys. At number 4 on the board today, the U.S. is considering extending a U.S. stock market ban on Chinese companies to internet giants Alibaba and Tencent, according to the Wall Street Journal, in what would represent a further severing of the financial ties between China and the U.S. Capital markets. The news came a day after the New York Stock Exchange again changed tack and went ahead with the delisting of 3 big Chinese telecom companies. Alibaba and Tencent are China's 2 most valuable private companies with a combined value of over $1.3 trillion. Both sets of ADRs fell over 4% in late trading in New York yesterday. The move would come at a particularly painful time for Alibaba, whose founder Jack Ma is coming under increasing pressure from Chinese regulators over the activities of Alibaba's financial services affiliate A&T Group. Right, big hit for Alibaba, guys. Big hit for Alibaba. Let's see what's going to happen with Alibaba and Tencent as well. And number 5 on the board, guys, about oil. It's about the black gold. Oil prices consolidated above $50, still enjoying the support from Saudi Arabia's unexpected decision to cut production unilaterally by 1 million barrels a day in February and March. Thank you so much for that, Saudi Arabia, for keeping the oil markets under control and for acting like a true de facto member of the organization, Petroleum Exporting Countries. Now, this move represents a return, if only temporary, to action as the world swing producer, a role it has tried many times in the past to shed, but one that is repeatedly forced to assume given its unparalleled production capacity and low operating costs. By 6:40 a.m., U.S. crude futures were up 0.3%, trading at $50.76, while the Brent was down 0.3% at $54.16. Concerns about the near-term outlook for demand were alleviated by a bigger-than-expected drop of 8 million barrels in U.S. inventories last week, according to government data. Right, this is what's happening so far, guys, with the markets. Let's have a quick look at the economic calendar. Let's not forget the economic calendar, guys, and the importance of having an economic calendar and checking the economic calendar every day. So let's see what's happening on the economic calendar, guys, and what's going to happen tomorrow as well, as we have a very, very big day tomorrow. We have the non-farm payroll, the first non-farm payroll announcement of 2021. In a very, very bad time for US. So today we have a holiday in Russia. The Russians are celebrating Christmas. So Merry Christmas to all our Russian friends. S Novam Godam, everyone, and all the best. Then we started early at 9 o'clock GMT plus 2 this morning, guys, with German factory orders, which came out positive, 2.3% versus an expectation of a negative 1.2%. Then we had the retail sales of 1.7% on the Swiss franc. Yeah, and market construction PMI on in the Eurozone, yeah, and in Germany came out again, 47.1. We had an ECB economic bulletin at 11 o'clock GMT plus 2 today, followed by a few announcements from the Eurozone. We had, and from UK, guys, because UK is not part of the Eurozone anymore since 1st of January, since last week. So construction PMI for December came out less than expected for the pound. We saw the Italian consumer price index, the core consumer price index, yeah, in the Eurozone, as well as the retail sales, which came out a bit disappointing, yeah, a bit below what consensus was expecting. We had an ECB monetary policy statement at 2:30 a couple of hours ago. And ever since then, we had a series of announcements coming from the U.S. From the U.S. dollar, we had imports and exports. We had the initial jobless claims that I was telling you about, guys, coming out at 787,000 versus an expectation of 800,000. So in theory, at least in theory, this should give the dollar a bit of a boost. But this, again, applies when the trading conditions are normal, guys. Yeah, when there's everything goes according to plan on Yeah, around the world. So let's see. Trade balance negative minus 68.10 billion versus an expectation of negative 65.2 billion. Wow, extremely high for the trade balance for November. Okay, then what's going to happen next? We're going to have the ISM non-manufacturing employment and ISM non-manufacturing PMI for December to be announced in about 42 minutes from now, followed by FOMC member Bullard holding a press conference at 7 o'clock GMT plus 2. Now, I told you a minute ago, guys, tomorrow is a very big day in the economic calendar. I want to show you the economic calendar for tomorrow as well. And in a few minutes, we're going to welcome my guest for today for the first round of market talks of 2021. I'm a bit excited. I'm a bit nervous for this. Now, let's see what is happening tomorrow in the economic calendar, guys. Very good day for trading. Tomorrow might be. Yeah, we're looking at announcements starting. Let's focus on the European ones. Yeah, 8:45, 9 o'clock in the morning, GMT plus 2. We have unemployment rate on the Swiss franc. Again, the Eurozone is in focus tomorrow morning. 15 minutes after that, at 9 o'clock GMT plus 2, we're going to have German industrial production and German trade balance, which again are very important, followed by French consumer spending and a few announcements on the pound, guys, on the British pound. Again, followed by the unemployment rate on in the Eurozone, which is expected to come out slightly higher than the previous. 8.5% is expected versus a previous of 8.4%. So it makes a bit of sense considering what happened and the lockdowns in the Eurozone in December. That's why I was surprised that the initial jobless claims for the US came out better than what economists have predicted. But we're going to see the NFP tomorrow. Now, tomorrow, 3:30, guys, hell breaks loose. We're going to have average hourly earnings. We're going to have the non-farm payroll, participation rate, private non-farm payrolls, unemployment rate, and the unemployment rate on the Canadian dollar. Huge volatility is expected tomorrow. Let's see what's going to happen. And we end the week strong with the regular Baker Hughes oil rig count. Okay, this is what is happening with the economic calendar, guys. Very important to know. Why? Because... and I'll explain to you why in a few very simple words. Let's say you are a technical trader. Yeah, you trade support resistance levels. You buy when the price is low, you sell when the price is high. You need to know what's going on in the economic calendar, because any announcements that you won't take into consideration might completely shift the direction of the market, or it might create such a whipsaw in the market that your stop loss, if you're using a stop loss, might be triggered. Yeah, so you need to know what's happening. Even if you're a technical trader, guys, even if you're not a news trader, you need to know the news. You need to know what's happening to know when to position yourself on the market. This is one of the lessons I've learned after about 3.5 years of trading. Right, now, this is what is happening, guys. Let's have a quick look at the charts. We are only 10 minutes ahead of the U.S. markets open. Okay, let's have a quick look at the charts on a 4-hour chart, guys, and see how the assets performed in the last week, in the last couple of weeks. Yeah, and let's see how the assets have opened the year so far. So we are starting with crude oil futures, guys, on a 4-hour chart, which is currently trading at $50.73. Very good uptrend for oil. Again, we're looking at the charts on a 4-hour chart, guys. So every candlestick that you see, every green or red bar represents 4 hours. Yeah, so we're looking back in time a couple of months now to see what happened, to see the trend. As you can see, we're looking at an uptrend on crude oil futures. Yeah, that started down here in when was it? 2nd of November 2020. So from 2nd of November till today, oil moved over $20 to the upside. Now, it's still in an uptrend, guys. We might see oil trading even higher. We might see crude oil trading even higher. Let's have a look at the euro, guys. There we go. This is how the markets open after the new year. You can see what happened down there. Yeah, a whipsaw movement that very likely triggered a lot of stop losses and left many traders hanging. Okay, this is what happened. So far, the euro is in a shy uptrend. Shy, but still an uptrend. 122.76 this afternoon for the euro. Okay, probably on the back of a weak dollar. We saw a retest earlier on of that 50 MA to the downside. And as things stand right now, very likely we're going to see the euro pushing higher towards the 123.48, as that's where the previous high is. Let's see. Only 10 minutes away from the U.S. Markets open, guys. Now we're looking at the pound, guys. 135.99, 136 flat for the pound, guys, this afternoon after the Brexit. Amazing performance for the pound. Amazing performance for the European currencies. What I'm asking myself is, were the European currencies doing better beginning of the year on the back of a weak dollar, or Europe really has reasons to do well? Yeah, if you know what I mean. We're gonna find the answers in the next couple of days, guys. I need a couple of days to get back on track with the markets. USD JPY on the other hand, 103.64 for the USD JPY this afternoon, with a retest to the upside of that 200 moving average. Yeah, at 103.71. Okay, we see the RSI and the stochastic quite high in the overbought levels. We might see a turnaround. Let's see what's going to happen. We might see the dollar continuing the downtrend. What's worth mentioning, guys, is have a quick look at the charts, guys. Let me make the charts bigger. There we go. These are the charts. Have a look at the charts. We see the US dollar, the USD JPY pair, touching that 200 moving average for the third time, for the fourth time almost. Yeah, we could consider this a retest of that 200 moving average. Still, the price is subdued by that 200 moving average. The dollar is still in a downtrend as things stand right now. Yeah, even though we had a great spike, look at it, a great spike in the last 12 hours. Okay, still, the candlestick formation did not manage to settle above that 200 moving average, indicating a bit of positivity. Now we're looking at the Aussie dollar, guys, which done really well in the last couple of weeks, in the last month or so. Yeah, again on the back of a weak US dollar. 0.7748 for the Aussie dollar on a 4-hour chart. We saw a shy, almost a retest of that 50 MA to the downside. We see a green candlestick opening now. RSI turned around and it's currently pointing upwards, even though the stochastic is pointing downwards. We see a bit of divergence between indicators there. So let's see what's going to happen with the opening with the US dollar. Okay, and we take it from there when it comes to the Aussie dollar. As usual, guys, we're going to have a look at some trading signals very soon. Here, we're looking at USD CAD, guys, which again is trading way below that 200 moving average. 127.10 for the USD CAD. Very shy, very little volume on the markets, very little buying power for the USD CAD. We saw a shy retest of that 50 MA to the upside. Then, as things stand right now, we see a red candlestick opening. Probably is going to push the price somewhere lower towards the 126.61. Yes, somewhere in that region, if this downward movement will continue after the US opening. Now, on the other hand, guys, the champions, the S&P 500 and the Dow Jones, the benchmark of American indices, done really well in the last month or so. We see the S&P 500 trading at 3,748.14 this afternoon. Okay, let's see how the opening will be, if it's going to open higher or lower. Yeah, we see the RSI pointing downward. Let's see what's going to happen. We're looking at Dow Jones. Dow Jones, $30,835.39 for Dow Jones. Okay, again, just like the S&P 500, we saw a positive opening, very good rally for the Dow Jones. And yesterday it closed in red. Okay, let's see where it will open today. We are only 5 minutes from the US Open. We're looking at the US dollar index, guys, again on a 4-hour chart, currently trading at 89.74. Okay, again, well below that 200 moving average, indicating a lot of selling power in the market. Well, no doubt about it. Considering what's happening in the States right now, the only good news is that Donald Trump announced he's gonna behave. Yeah, the same Donald Trump that a couple of months ago, if you remember, guys, was announcing that he's not gonna behave. He won't leave the White House. Okay, today he announced he's gonna behave. This was the only good news, yeah, and that the fact that the U.S. Congress admitted Joe Biden as the U.S. elect president. Now, this can only mean one thing, guys. If the U.S. dollar index goes down, gold futures will trade higher. 1918.25 for gold futures. You can see that big red candlestick, that $20 shed that happened yesterday. Let's see what's going to happen from now. 1917.60 for gold right now, with the RSI and the stochastic somewhere in the lower section of of the charts, yeah, indicating a bit of a meltdown, a bit of selling power. But what gives me a bit of hope is that the price is still supported by this 50 moving average. Okay, the price is currently trading. The action price is between the 50 and the 20 EMA. So as long as the price is within that range, we can tell for a fact where the price will go. Now, quick look at Brent oil futures, guys, or the European oil or the UK oil, how you might know it. $54.16 this afternoon for Brent oil futures. Very good performance, very, very good rally. Have a look at the rally that happened in the last 2-3 trading sessions. Impressive rally, guys. Silver futures 27.23. Sorry, for silver futures this afternoon. Silver futures are ranging for the European trading session since this morning, after it gave back a bit of a few dollars on the US trading session overnight. Yeah, on the Asian trading session. Again, RSI stochastic somewhere in between. Okay, no one can tell for sure the next possible direction. And now, guys, check this out. Everyone's favorite, the Bitcoin, guys, is currently trading at $38,517, guys. $38,517. Wow. Let's have a quick look on a daily chart. There we go. And see the 20,000 mark, okay, that everyone was expecting. There we go, guys. There we go. This is the previous all-time high. Yeah, the 20,000 mark. And now we see Bitcoin trading at 38,500. What an amazing rally. What an amazing performance for Bitcoin. You can see the RSI and the stochastic. They don't even worth mentioning anymore. They're off the charts, guys. Off the charts with Bitcoin. 38,500 almost for Bitcoin. What an amazing rally. And Ethereum, guys, to top it up. Congratulations to all of you that bought some Ethereum a couple of months ago, that maybe you couldn't afford the Bitcoin, or maybe you thought Ethereum has the same potential as Bitcoin. Well done, guys. And there's the proof. $1,202 for Ethereum. Only when was it? 2-3 weeks ago, we saw 2-3 weeks ago, Ethereum was trading anywhere between $500 and $600, guys. So anyone that invested in Ethereum and Bitcoin in the last couple of weeks, most probably now they are smiling. So this is what is happening, guys. Neil Wilson will join us in a couple of minutes. Let's see where Neil Wilson is, and then we're gonna come back and have a quick look at some trading signals, again provided by investing.com. Once again, guys, markets.com, our partners, our sponsors, have an amazing trading platform. Not one, but 5 trading platforms. Anything you can imagine, from an MT4, MT5 to a web-based platform. Right, we're getting some comments. Let's see what is happening with the comments. Hi, good afternoon. Hi, son, how are you? Hope you're doing great. Let me know what you think about the broadcasts. Let me know if you're struggling with anything. If you're a trader and you need a bit of help, feel free to let us know, and we will do our best to help. Right, let's see where Neil Wilson is, guys. He was supposed to join us a couple of minutes ago. Let's see where Neil is. Bear with me for just a second. All right. He's going to join us shortly. So, guys, meanwhile, how are you? Tell me about yourself. How are you doing? What are you struggling with? Why are you watching me? Let me know how you're doing, guys. Okay, and we're going to come back with Neil Wilson. Right, impressive, guys. I cannot take my eyes off Bitcoin. It is amazing. I haven't seen something like this in my 10 years of career, I must be honest. Where it will go from now, I have absolutely no idea. And I don't think anyone in the world knows where Bitcoin will go. And I'll explain to you why. As you can see, there we go. Yeah, as you can see, we are in uncharted territories. Okay, whatever we knew about Bitcoin, we knew about the $20,000 mark up to there, which was the all-time high, yeah, which happened in December 2017. The moment Bitcoin went through the roof and broke the 20,000 mark, the all-time high, okay, no one can tell where Bitcoin is going to go, because you have no reference points. Okay, usually in trading, when you're trading, you're looking towards the left-hand side, yeah, to the previous high. That's your reference point. Yeah, the previous high or the previous low. In this case, we don't have a reference point anymore. Yes, so after such an incredible rally, after such an amazing rally, we might see a correction of the market. Yeah, we might see the price coming down because people that bought when the price was let's say 20K or below are now closing their positions to cash out. So whenever you have a huge number of traders closing their positions, their buy positions, we're gonna see this meltdown that usually happens in the markets. Now, Neil Wilson will join us in the next minute or so, guys. Stay tuned. We're coming back live in 30 seconds. We're Neil Wilson, Chief Market Analyst at Markets.com, straight from the heart of London. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
All right, guys, then we are back for the first time this year from the heart of London with Neil Wilson. Neil, good afternoon. How are you, man? Happy New Year.
Andrew, yeah, Happy New Year. I'm very well, thank you. Yeah.
All good?
Yes. It's been an interesting start to the year.
Oh yeah. It's been a few weeks since we last spoke, and I must confess I'm a bit sad. Wait for you to see how sad I am. Brexit finally happened, and the question is, how will you go to Spain in the summer from now on?
Well, I'm not really sure. I don't think we can go anywhere right now, but with the pandemic. But yeah, it's thankfully it's over. So there's still some devil in the detail. The agreement is a sort of living document. It can be changed, it can be amended, but it basically gives sort of preferential status to the UK as a sort of preferred. It's the most aligned third country to the EU. It's a very close trading relationship, but there are obviously doubts about the financial services sector. There's not really been much clarity there, and there's already been a big shift in European equity trading has already shifted to Amsterdam and Paris chiefly, and it's not clear whether or not that's going to come back. Now that's not really affecting jobs in the City of London as such, but it's certainly a sign that maybe some of the luster can be lost if you're not careful about these things.
This would have been my next question. What is the situation in London right now in terms of Brexit, in terms of the vaccine, in terms of the lockdown? How is the situation in London?
Well, I think London hospitals are starting to become overwhelmed. But apart from that, I think the mood is quite optimistic. The FTSE had a good start to the year. The market's up about 6% this year, so this week. And we've seen some real big gains for the likes of BP, Shell. HSBC was up 10% yesterday. Standard Chartered was up 10%.
Wow.
Really big gains for heavyweight stocks, and not the sort of moves that you see, that sort of high beta type moves. So really impressive start to the year. There's a lot of optimism about M&A activity in the city, a lot of feeling that there's still a lot of deals to be done. There's going to be some IPOs coming, so I think there's a lot of optimism in the city as ever, as it sort of looks ahead to 9 months, 12 months out, rather than sort of staring at its feet.
Talking about the city, check this out. Let's have a quick look at the pound. We see the pound trading very, very high as things stand right now at 136. And if it will break the 136 to the upside, the next stop is 142. What would take for the pound to go that high? What would be a potential catalyst for the pound?
I think if you got to say the end of February or mid-February, end of February, early March, whatever it happens to be, and the vaccines have really kicked in and worked, or that we can really clearly see that they're working, and that we are going to get out of the worst of it, and move forward, then that's going to be a big thing. That will make a big difference to the pound, because you've got this, underpinning it is the Brexit deal. So we don't have the tail risk. There's no tail risk anymore about a no deal Brexit. So that's gone. I think if you're looking specifically at cable, then obviously US dollar weakness is a key factor. I think we've seen the dollar weaken. I think we talked about, running down to 88 seems inevitable for the dollar index, but that dollar weakness story could play out more quickly this year than maybe anticipated. So we get a sort of weaker dollar weakens in Q1, and then maybe starts to find a base maybe later on. So we need to see how quickly it weakens. If it hits, if it starts to drop below 88, then obviously you start to think that dollar weakness story continues. But I wouldn't be surprised if you see the dollar index sort of stabilize around the mid, 88 and a half, and that would be where maybe you'd start to think, well, the euro's looking not, the eurozone economy is still not great. There's still a lot of deflation. The data yesterday showed Germany in deflation for the 4th straight month, I think. So it's going to be tough, I think, for Europe. It's going to be tougher for Europe. I think America's leading the way.
But it's tougher for US.
Sorry?
It's tougher for US. Europe might be hit hard. UK might be hit hard. But man, what's happening in the US, I have never seen something like this.
Yeah, I mean, politically, but I think, economically, the US and the UK are the advantage that we might have over the Eurozone is obviously easier coordination of fiscal and monetary response, and which we've seen. But also, I think, the vaccines, if you look at the charts, the UK and the US are leading the way. If you exclude Israel and Bahrain, which are relatively small and they're quite specific cases, they're doing an exceptional job. But among the big developed economies, the US and UK are leading the way, and France hasn't vaccinated anyone practically. So, I think that will make a difference come the spring, when things start to pick up, and hopefully, hopefully we do see things pick up, and it's not a really slow grind. You'd like to see a bit of a really, really strong summer for the economy, and I think that sort of plays into the pound potentially rising to 140.
Yeah, once more people get vaccine, then the situation, let's say, gets towards back to normal. Then there will be a fight for the economy. Now, the next hot topic of the year, apart from elections, Brexit, and everything else, is the Bitcoin. What is your take on this incredible rally of the Bitcoin, Neil? What caused this amazing spike?
Well, probably, there's been lots of underlying currents and trends that fed into it. PayPal last year, their decision to allow people to buy, sell, hold various cryptos, Square, MicroStrategy getting involved. They were buying Bitcoin. And obviously at the start of this year, you've had this decision by the US regulator to allow settlement of Bitcoin. That will make a difference. You've got a lot of, I guess, excess liquidity that needs to find a home, and I think that's important. That's what we've seen with across global markets, and you're seeing institutional investors getting involved a lot more. Adding small positions in Bitcoin, but you don't need much of an increase in allocation to Bitcoin to really ramp up the price, just because it's so small. The problem is it's still very liquid. You saw, I think last week, the price moved 10% when somebody sold, I think, about 150 Bitcoin or something like that. It's still very illiquid. It's still held. 20% of Bitcoin have been lost. Even more and held by a handful of people. It's still very liquid. It's still very dangerous. I think you could be looking at a big sell-off and come the middle of this month. There's investigations into Tether and that are ongoing in New York. The Attorney General there, that investigation could throw up some things. And I think January the 15th is the deadline for that. So watch out for that one. There could be this looks like it could be a bit of a front run of that move, and you don't know if there's maybe going to be a big sell-off come the middle of the month.
That's what I'm afraid of. This is exactly what I'm afraid of, because there's one thing seeing a currency reaching the all-time high and settling a couple of grand higher, let's say, or somewhere in that region, and there's another thing seeing this cryptocurrency matching the all-time high and doubling in less than a month. It's a bit too good to be true. Is this a good time to buy Bitcoin, Neil, from your point of view? I had half a dozen with the same question.
Very wary. Yeah, no, I'd be very, very, very wary of it at these levels, I think, because you've got that sort of parabolic move, and when you hit the top of a parabola like that, it's always dangerous. We've seen it. We saw it. We've got a similar, it looks very similar to that 2017 move that happened. I mean, if you look at there is an argument that can go higher from here, because if you look at, based on past history, if you look at the July 17 to December 17 move, so that sort of swing low in July 17, when it touched that moving average support, I think you've got there, it moves about 1,000% between those dates. In about 6 months, it moves 1,000%. The move from the last swing low back in 2020, that sort of touches this that red line.
Under the main.
Yeah, there. And it's only up, I think, about 700% now from that level. So, you could say that, well, there's another 300% in there. But equally, you're looking very toppy at these levels.
I don't know what to say. I don't even know what to think about it. I am afraid of the dump, of the big correction. I am afraid this was a pump and dump, in a way. I don't know what caused it. Very, very difficult. And I'm super upset that I didn't buy more Bitcoin when it was cheap. Now,
probably not as upset as the guy who sold, what did he bought 2 pizzas with 10,000 Bitcoin, the very first transaction.
I don't even want to think about it. I would. Anyway. Now, how about the US dollar? We all saw what happened in the US in the last 24 hours. What should we expect from the US dollar this January? Any hints, or we see tomorrow after the NFP?
Yeah, I think you're looking at data. I think the dollar is obviously still in this downtrend. It's still, the pattern is still, the bias is still to the downside, just because that's the trend. You've seen it recover a bit of ground since around 1:30 yesterday afternoon UK time. I think it was roughly as the German inflation or deflation data came out. You saw a bit of recovery in the dollar, and it followed through, and it's holding on, but not too bad. But I think you really need to see it recover. You need to see some big recovery, sort of to 90 first, before you'd really be confident of that it's a sustained move higher. I think that would be one of the sort of levels that I would be looking at as a general round number target, if you like. And then also looking at to see what the Democrats are going to be doing over the next sort of 2 to 4 weeks. I think you need to see to what extent the likes of AOC, Bernie Sanders, Elizabeth Warren take control of the Democrat machine in Washington and in the House of Representatives and the Senate. Because if they do, that sort of more left-wing socialist kind of wing of the party gets a grip on the policy levers, then that's going to make a big difference to the way the market looks at the dollar. And I think it will imply much more treasury issuance, much more fiscal expansion, which, all else being equal, ought to see the dollar weaken.
True. Very, very awkward beginning of the year, Neil. Things are way far from calming down. Is midterm, long-term trading out of the question still, or not?
Well, no, I think you can still apply the same sort of strategies that you might. I mean, I did see a Citigroup today said that basically the top is in for the year, so maybe it's time to just pack up for the year. But I think there's going to be a lot of volatility this year, probably more than maybe the market thinks, because I think you'll see disappointment around certain aspects of policy, stimulus. The problem is that as soon as you start to see, if you do see a big bounce back in the recovery and yields go higher, inflation comes through because there's so much pent up demand, and specifically in things like sectors of the economy where people are desperate to get going, like in travel, say, where there just simply isn't enough supply to match the demand that there will be. You see inflation coming through. That'll start to create some volatility, I think. But otherwise, I think the broad backdrop is still pretty positive for stock markets.
I'm with you. And what should we keep an eye on, Neil? What do you reckon is the hottest or one of the hottest assets right now, apart from the Bitcoin and Ethereum and cryptos?
Well, I would say the FTSE, because I think there's probably a lot more for it to run. I think the UK market's still very cheap versus peers. You've got the DAX trading at an all-time high, the Dow and the S&P trading at all-time highs. The Nasdaq's always massively rich. Even the Russell 2000 now is very rich. I think the FTSE's the one sort of corner of the market that still has to kind of flex and kind of has room in front of it. Prairie to run in front of it, and I think that is probably the market where you could potentially see the most sort of at least large liquid index that I'm talking about here. I mean, there's obviously lots of interesting individual stocks and so on to look at, but that would be the main market that I'd be looking at. I think also gold's interesting because I think you've had a bit of a pullback to that $1,900 level.
Yes,
and it's got, I think, with the way, although US Treasury yields, nominal yields, probably going to rise a bit this year. I would think that inflation expectations will rise further and faster, and that should support the tips market. And if the tips market is bid and supported, then that should help gold rally. So I think gold, and if you've seen the divergence between 10-year tips and gold lately, and I think gold's got to catch up with the tips market still. So I think you've got a run at 2000 probably on the cards before too long.
Yeah, looking at the charts right now, this is the gold chart. Yeah, we can see the drop from left to right. Yeah, and after that retest below the 200 MA, we see an uptrend, more or less. Yeah, this looks like an uptrend.
And
so we might
a very nice clean break above the 50-day as well, which is usually quite a good. If you get a nice confirmed strong push above the 50-day, going back over the last couple of years, it's been a pretty good trade to be in, to be long in, until it falls back below the 50-day. Once it falls back below the 50-day in a sort of sustained, confirmed way, I'm not talking about trading through it on the day, but a couple of candles, really strong candles through it, then it's been that's been the time to get out and become short, because that trend has gone then lower. So that 50-day line is certainly one to watch, and we're still above that, I think, so still looking pretty positive.
Yes, correct. All right, we keep an eye on that, and we speak again on Monday to see where we are. I'm very curious about the NFP numbers tomorrow. A few minutes ago, half an hour ago, we had the initial jobless claims coming out in green, way better than economists have predicted, which makes me giggle a bit, to be honest, considering what happened in the States last month. But let's see the numbers tomorrow. What do you reckon, by the way, dollar for tomorrow, up or down?
Dollar tomorrow, I think probably do whatever it's done today. It's gone up a bit today, so probably pull back tomorrow. I think we're chopping a bit. I think we're just chopping in and out. So probably down tomorrow.
Probably down from your side. I'm gonna say probably up from my side, and I'll meet you halfway. All right. Now, yes. Now, Neil Wilson, everyone. Neil, thank you ever so much for being with us today. It's been a pleasure. Congratulations, and once again, we're very sorry to see you leaving. How will you get in the summer? This is the question. Or to Cyprus?
To get to Cyprus, well, well, I need to renew my passport anyway. That's for sure.
There we go.
Nice new dark blue passports that we get now.
The third world country passport.
Yeah, just like America. Okay.
Yes, exactly. UK is an empire. Poor third world country. Anyway, I'm glad that everything settled from the UK EU side of things when it comes to Brexit, and they settled before the year end. I was expecting a a rollover, to be honest. 4 years of roll.
Lucky that they did it in the end.
Yeah. Right. This is it, Neil. Thank you ever so much. I'll get back to you on Monday. I'm curious to see what's going to happen on Friday tomorrow with the NFP numbers, and let's see. So again, you say the USD down tomorrow, yeah?
Yeah, why not?
And I'm going to say USD up. Should we bet on a bottle of wine?
Makes sense, yeah.
All right. You're going to have to pay customs, though, or not?
Okay. I'll pick it up next time I'm in Cyprus.
All right. Anytime you want. Neil, thank you ever so much for being with us. Have a great weekend ahead of you, and I'll talk to you on Monday. Neil Wilson, everyone. Right. I'll tell you what, we're coming back live in exactly 30 seconds, guys, with the signals of the day. What do you say? Stay tuned. We're coming back live in 30 seconds.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
All right, guys, beautiful people, we are back with the signals of the day. We are already almost half an hour, 25 minutes into the US trading session. Let's see how the analysts at investing.com see the currencies today. We're looking at three red, guys. We're looking at strong sell positions on the euro and the pound versus the US dollar this afternoon, with the daily remaining a strong buy, though. We saw a positive market opening on the US dollar, USD JPY, and USD CHF. Are pushing higher. Now we have 4 green on USD JPY and 3 green on USD CHF. 3 strong buy positions, very good good buy positions. The Aussie dollar versus the US dollar has strong sell positions, but the daily remains a strong buy, guys. The euro is supposed to strengthen versus the pound. We have 2 strong buy, 1 sell, and another strong buy on a daily chart. So more green than red for Euro GBP. USD CAD, on the other hand, 3 green for USD CAD, 3 strong buy positions. The daily remains a strong sell, though. So we're looking at a downtrend on the long term. But today, just like Neil Wilson said a couple of minutes ago, we might see the dollar pushing higher. And who knows, over the night or tomorrow, it might start dropping again. The Kiwi dollar versus the US dollar again has 3 strong sell positions. Euro JPY and Euro CHF, 4 green, guys, 4 strong buy on the euro versus the Japanese yen and the Swiss franc. And the pound, guys, the pound versus the Japanese yen and the Swiss franc. On a 5-minute chart, we're looking at strong sell. On 15 minutes, we're looking at buy. On 1-hour charts, we're looking at strong buy. And the daily on the CHF is neutral. So a bit of caution, guys. A bit of caution is indicated. Let's have a quick look at is suggested. Sorry, let's have a quick look at commodities, guys. See what the analysts think this afternoon. We're looking at gold and silver in red, guys, this afternoon with 3 strong sell positions. We're looking at copper with 4 green, 4 strong buy. Very good performance for copper. Crude oil WTI, guys, we see strong sell positions, although the daily remains a strong buy, and the Brent oil is neutral. So think twice. If you want to follow trading signals on crude oil, on Brent oil, because they might just turn around. So far we have the daily remaining a strong buy, but this is it. Apart from that, everything is neutral or a strong sell on crude oil or Brent oil. Natural gas on a 5-minute chart is neutral, and then we're looking at strong buy positions. But again, if we see a neutral trading signal on a 5-minute chart, we might see a correction. So all those strong buy signals might turn into sell if the downward movement continues. And we're looking at the US wheat, guys, with strong buy positions on 3 of the time frames. Very interesting potential long positions for US wheat. Let's have a quick look at indices, guys. Let's have a look at Wall Street indices. See, wow, there we go. This is what we like to see, guys. A lot of green on the charts. 4 green for most of the American indices. Here we're looking at NASDAQ 100 with 4 strong buy, S&P 500 4 strong buy, Dow Jones 4 strong buy, the NASDAQ 4 strong buy, and the Russell, guys, the small cap 2000 again is showing us 4 strong buy positions. Very good performance for the US indices. Quick look at a couple of stocks before I let you go, guys, in case we have some stock traders watching us. We see 4 strong buy on Exxon Mobil this afternoon. Apple, very shy this afternoon with a strong buy on a 5-minute chart, followed by sell and strong sell. We're looking for 4 of a kind, guys. Yeah, whenever you see 4 of a kind, very likely that's the direction. There you go. JP Morgan, guys. 4 strong buy for JP Morgan. 4 buy for Chevron. We're looking at Intel again with 4 strong buy positions. Citigroup, 4 strong buy positions once again. Bank of America, Goldman Sachs, Walmart, and Alphabet. Yeah, the ex-Google. Wow. Okay. So the stock market today is doing tremendously well, guys, at least as things stand right now. In the US, the euro and the pound, supposedly they are weakening this afternoon versus the US dollar, and the US dollar is strengthening versus its other peers. This is the situation right now. Right, guys, it's been a long day. Thank you so much for being with us today for the first live broadcast of 2021. We had Neil Wilson with us. We had the amazing news from InstructFX. Okay, once again, guys, InstructFX is providing free counseling, free education, free mentoring for anyone that's willing to learn how financial markets work. I have exactly 10 slots available for 10 lucky clients this month, and I will personally mentor them for 2 weeks up to a month. Okay, I can only take so much, guys, only 10 people. Okay, and number 3, guys, if any of you had a bad experience or had a good experience with Forex trading, with trading stocks, with trading commodities, feel free to contact us. Join us live, guys. Tell the whole world your story. We're going to try and help you as much as we can. Right, this is it from my side today, guys. Join me again tomorrow, same time, same place. By the way, in 2021, guys, starting January, we are not doing the European opening anymore. We're going to start the broadcast in the afternoon at 4 o'clock GMT plus 2 or 2 o'clock London time. Okay, half an hour prior the US markets open. Okay, and we will continue after that. Yeah, let's see how it goes. We're going to keep this schedule for January and February. Okay, and I have another big surprise for you in February. We're gonna have a remake of the studio. We're gonna change things around a bit. It's gonna be amazing. Right, guys, leave me alone. I gotta go home. Thank you so much for being with us today. Happy New Year once again. Merry Christmas for our Russian friends. Until tomorrow, guys, remember to trade responsibly and may all your trades be in the money. Have a nice day.